Hi everyone, this is Dwayne Roth from the Roth Companies with an educational economic update for April of 2020. I hope this brief commentary and update from our wealth management firm finds you and your family both safe and healthy under the issues that we're actually managing worldwide. The spread of COVID-19 sent stocks tumbling in March as health and the economic costs of the pandemic began to just increase and mount. The Dow Industrial lost nearly 14%, while the S&P 500 dropped 12.5%. The NASDAQ composite fell slightly over 10%. Everyone felt a lot of pressure and certainly some concern just went over the global investment world. Stocks moved sharply lower early in the month, and as investors grappled with really trying to get their arms and understanding of the headlines that were coming at them, we all had to embrace the challenges that we were under. On March 15th, the Federal Reserve cut interest rates to zero and announced several actions that designed to support households as well as businesses. However, markets were unfazed by the Fed's aggressive move, trying to be proactive, electing to instead focus on the contraction of the economic growth that many were expecting and still are. As prices fell, the hospitality, real estate, as well as travel industries felt the immediate impact of the newly instituted social distancing rules. At that time, we've seen financial stocks suffered losses on lower interest rates, while energy prices sunk to new lows and part of the lower oil prices. In weeks to come, investors most likely will be paying much more closely attention to the actual status of the cases of COVID-19. We've all been concerned and monitoring our own families and friends, business associates, and certainly should be taking preventative measures. Investors also are expected to watch fresh economic data that may provide some insight to the current level of economic activity. One example may be the weekly jobless claims for unemployment insurance, which could provide a preview of the overall health of the labor market in advance of the monthly jobs reports. Throughout the month, companies will be preparing their financial statements and overall reports for the first quarter earnings. The reports may provide some information about how deeply firms have been impacted with the overall economic slowdown. These organizations, I'm sure, are also working through all of the stimulus programs that were rolled out. We all know that many businesses in the U.S. have been trying to better understand the new legislative moves that were pushed out to help stabilize our economic stresses that have been felt by all of us. And specifically, business owners and people that have employment are trying to navigate not just the side of safety for their employees and themselves and their families and businesses, but also having the mindset of trying to actually keep good financial health with their organizations and keeping people employed. We realize that that's always a challenge through all the serious concerns and issues that the coronavirus has impacted the overall global markets as well as societies, and specifically seeing how the East Coast and New York has been greatly impacted. Hopefully none of you have any friends or families that's been impacted so severely like some of those we know. I do hope that each and every one of you are blessed and the good Lord may carry you through these tough times. But in the meantime, here at the Roth Companies, we are certainly on top of the investments that our clients are wanting to make sure that we're on top of as we help them prepare for retirement, or those that are in retirement have an appropriate strategy. Those of you that have questions that may not be a part of our firm, please give us a call. We're happy to share with you any additional insight pertaining to your own situation and certainly provide a better understanding of how you can navigate through these challenging times. Please understand that the overall stimulus plan, as well as what the government has stepped up this time, was much greater than what happened in 2008. In 2008, the Fed was not as proactive, and as they say, when you win, you win. But when you lose, you better learn. In the case that Jerome Powell and the leadership team with the Federal Reserve, they certainly learned and they were very proactive from what happened in 2008 to what now is happening here in 2020 with the pandemic and other issues that were previously trying to be managed, such as the trade pact, the energy debate between Russia and Saudi Arabia. Therefore, as we move forward, we're going to be tracking all these important issues. And as I said previously, if you have questions, we understand that it is normal to be concerned. We are the experts to actually carry out and provide clarity and better understanding to some of these life-concerning issues dealing with your wealth, your retirement, tax consideration, and trying to capture these necessary moves in your strategy within your financial plan that can be incredibly advantageous from not just investing, but also taking advantages of some of these depressed prices for opportunities on the recovery side with a better tax and estate strategy. Here we're going to close out this month. Again, this is Dwayne Roth from the Roth Company signing off. From our wealth management team, have a great rest of the month. Stay healthy, stay safe. We'll look forward to seeing you guys next month. Have a great day.